Hi, good morning. This is Lee. It has been a long time since last time I posted a video regarding day trading strategies. Recently, that because of the markets are very different every year, every month. So in the past, I have uh, implemented several strategies based on unit wrinkle bars and also some other features in and using indicators to trade based on uh, Uniwrinkle bars. Now, and these strategies are still running, and but you still have to change the settings from time to time to optimize your trading results. Now, this current strategy that has been implemented recently is based on the time-based bars. That's a 1 minute bar, and I just want to go over the strategy and also the settings of the strategy so you can understand how it works and what you can do to optimize the settings to meet your day trading goals. Um, it's it's uh, it's not that complicated. So what you see right now on the window, this is a Nasdaq June contract 1 minute bar. And on this window, you can see this indicator right here is a MACD. MACD is a very common indicator. It's being used for many purposes. You can use it as a trend um, trading method or as a filter to filter the trades that you wanted to do with. Sometimes you can do swing trades or scalping or range trades. There are many ways you can use it with MACD. And this is a linear regression line, and usually we use this as a filter as well. Now, in this method, I use this linear regression as a filter. Okay, it's pretty simple. When you see the linear regression goes up, and that means uptrend, and you can take long anything that is appear to be a short trade, and then this line will filter it out. Um, it's a pretty standard method. Now this MACD right here, you can see um, this is a classic MACD, and this red line is the average line. And I had the MACD line set to transparent, so you won't see that line because for this trading method, we only use average line. Um, this is this histogram, which is the difference, the diff that it'll give you a threshold of the entry. For example, right here, these two trades, these were short trades. The shorts were stopped out. Now, but when you look at why these shorts existed or occurred, because of this uh, average line has crossed below zero. This is the zero line of MACD. And this green line, which is a threshold, that is -2. Now you can see, let me go, it's set at -2. All right. So once this average, the diff line cross actually dip below -2, and then this average line is below zero, which is right here. And then you can see, let me just get the, will be a little easier for you to understand right here. And at this part, the short is confirmed right here. So that's why this is a short. So the entry will be the open of the bar after this signal bar, which is right here, right? Right here. And it went down, 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 and then got stopped up right here. So now this is the entry right here based on the conditions of the linear regression, okay, this linear regression right here, is um, lesser than this bars of linear regression. Okay, so this condition is met short, and then also the average line crossed zero below zero, and the diff is below -2, which is right here. So short right there happened and then stopped out. Now for longs, it's the same thing right here. There's a long, and we have the I have the background painted as green, so you'll be able to see uh, the bar here. Because of this condition and this condition, linear regression is up because the current linear regression is greater than the previous linear regression. And this area, the average at the average line has crossed, actually has passed zero and above zero actually, and the diff line is above 2, which is right here. So this condition also met for the long trade right here. Okay, that'll be easier for see. Yeah, right here, long, and then the entry will be the open of the bar after this signal bar right here, and you hit a target right there within a bar. So it's pretty simple. And then this method, in order to actually, if you now with the strategy that I implemented with this trading method, that I try to make it as simple as possible because in the day trading world, if you wanted to scalp like 40 ticks, 60 ticks, 10 or 20 ticks based on different instruments like NASDAQ. You want to do 40 ticks, 60 ticks. You want to go in and out fast. Sometimes you need a 1, 2, 3, or 4 bars to hit your target. Or you want to also have a very tight stop to not to lose too much in a trade because NASDAQ goes really, NQ is a very fast instrument, and you want to be in and out, or you want to do swing trade. You can go like, for example, this is long trade, and you can get in and let it ride since the average line is still above 2, and you can let it out right here, right there, once the average line start trending down and dip below this threshold, which is 2, and you can let it out here, and then from this point you probably will get a pretty good trade. Right here, you can get out right there. That gives you 58 points from now 5 to 9:25. In 20 minutes, you get 58 points. Each point is $20, so you look at pretty good, decent profit here. But that's just one example of any trades that when you look at it and you see, oh, here's a long trade and that's profitable, a very good trade. But in the real situation market, when the market goes right here, for example, so you see this is current market. We see if let's say hypothetically saying this is a lifetime right now. You're looking at the market that's 1 minute bar. It goes really fast, right? So now first signal occurred, okay, and you took a long trade right there, entry. Then you go minute by minute, right? Minute, 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 and then at this moment, what are you going to do? The diff is going down a little bit, and the average line is trending down. Okay, so and then you look at overall market. Let's say right here. If you look at the overall market, okay. So from 7:32 Central Time, the market started trending down. That could be a bottom right there, and you have a higher high right here and a lower low right here. So it's trending, but all of a sudden it starts going down a little bit, and you have a lower highs and then lower lows. So the trend at this moment is trending down. So the time is 9:05 Central Time, but based on MACD and the linear regression, this trend is gonna take off from this point on. But yeah, that's true because you look at this area. If the next bar closes above above this bar, okay, then the uptrend could be confirmed. So let's say you go, and at this moment you go 1 minute. Oh, here we go. This bar, the close of this bar has broken the high of this high right here, right? The close of this bar has broken a high of this bar. So the uptrend is confirmed and the average line has gone up. So at this moment, you're comfortable with this trade, right? And then you just let it ride, and then just keep on going. And then the average line is still above 2, very bullish, right? And it keeps on going. And you might want to, okay, here we go. You hit my daily profit. I'm gonna take out right here. I mean, right there, because the average line start trending down. This is a divergence right there. The price is going up still. You have a higher high, but the average is trending down. So divergence happens right there. You can let it out right there. You can just say, okay, I'm gonna close the position right here, which is already very handsome profit. See right here. Here's a, wait a minute. Hold on. You can see this is a divergence right there. Actually, the actual divergence should be right here because this is high. The close of this bar is above the close of this previous high. I mean previous close, but the average line is trending down. So this is signal divergence. You want to get out right here. You can actually take 67 points of the trade and you'll be done for the day. So that's another way to trade, and based on this setup, you can look at it. Now that's the winner trade, but then you look at let's say the losers right here, right? Right here, the losers. Now you got in a short, and everything's confirmed is short. Then you go, and the average start turning back and went above -2, and then that's why it got stopped out right here, right? Same as this one. You got in, and the next one, the average bar start turning. There you go. Right there. If you get out, when this average bar starts going up, and the average line starts going up, and went above -2 threshold, and you should actually stop, get out, just move on. Which the strategy set to stop this trade, and you take the loss and you move on. So this is the now the setup for the strategy. It has time and basically there's no daily profit and daily loss limit um, embedded into the strategy because the trading time period for this method is basically from 8:35 Central Time to 12 p.m. Central Time. Anything after 12 is just not necessary to trade anymore. So what this strategy does is to capture the trades automatically and then set the target and the loss and have you to trade, basically better manage your risk. So this is short trade right here. You hit the target, and that's when trade happened at 11:32. Right. This is a pretty clear downtrend, but the downtrend is already happening and from the beginning of the opening. So the steam is getting really less and less at this moment. Actually, you can see the bottom is forming at this moment, but this trade is already taking the profit, and then from this point on, you can trade it up. Like for example, you can take no, not this trade because it's not above 2. Why? Because the time of the market is already 11:50. It's lunchtime. Anything can happen during lunchtime. So right here, there's not that many trades after. So this method is, just recap, is based on MACD settings. The average line cross below zero and the diff is greater than -2, or I mean greater than 2 or lesser than -2. Then the entry will be confirmed and the order will be placed. Um, it is simple, and then to better optimize this strategy, you can use NinjaTrader Analyzer to optimize. Um, for the current strategy setup that I have for this setting is right here. The window's a little bit too big for some reasons. Okay, here we go. The target is 60 and the stop is 60. The reason, let's just turn it off. Well, the best way to actually scalp, you wanted to have one-to-one risk and reward ratio. If you want to have a better, well, it really depends on the instrument, depends on the time, depends on the strategy. For this strategy, the initial setup that you can try is target 60, stop 60. These are based on ticks, and start time is 8:35. Stop time is 3 p.m. And usually that you can actually change the time. It depends on the performance. Okay, so then you can see the parameters right there. LP, which is the linear regression period, 110. MACD period 3, average is 6, and different period is 2, and threshold is 2. Threshold is the line. So you can change, or you can modify these numbers based on the analysis that you run, based on what you wanted to achieve. You can set target to 80 or 100, depends. But one-to-one ratio, risk reward ratio is best for this method. Okay. Now, let's enable this strategy, and I can just give the performance report on the last 30 days for this strategy, and you can see, but it's actually, if you do one-to-one risk reward ratio, you get 64% profitable, which is good. Anything above 60 is fantastic. So you have 18 losers and 32 winners, a total of 50 trades. Um, the average trade is this, and the max drawdown is this number. And then you can do analysis, and you can go to half hour of the day. Then you can actually determine, if you switch to entry time, right? You can determine, let's say, all right, you want to start trading at 9, not 8:30. You want to do 9, and you want to continue ride it, or you don't want to just trade this time frame, like from 9 to 9:30, and then stop trading, and then start trading again from 10:30 to 12:30, and then after 12:30, just forget about the rest, because basically it's a wash off right there, based on the last 30 days of analysis, right? So now if you go, okay, you go to data series, and you can go change to 45 days. That is, let's see, that is from 45 days. Yeah, March 14th, which is actually, I remember it's Thursday, 15th is Friday. So the contract rollover date. Then you look at, it's the max drawdown is the same thing, and the percent profitable is more or less the same, 63%. And you have this number, you're fine with it, because the risk and reward ratio is 1-to-1, right? So then you look at daily, and then you look at the half hour of the day, and you switch to entry time, and you'll see, oh, here we go. You can trade from 8:30, and you'll have some loss, like around 10 a.m. time. You have $625 of potential losses right there, and you trade until 12:30, and the rest of the day you just let go. So in this case, You want to go, let's say, let's reset the strategy, the time. Oops. There we go. To 12. Let's say just 12. All right, noon. And let it run. And that's what. Then you look at, oh, here we go. That's 45 days. You get the same max drawdown, same percentage, but you have less profit because you only trade until 12:30. All right, it's the same thing. So that really depends on what you wanted to achieve. That's the net profit, and then you look at analysis again. You want to see, okay, the trend looks nice, and you want to look at the time frame. Yeah, that's pretty much it. At the 10 a.m., there are six trades happened entry. There's six entries at 10 a.m. from 10 a.m. to 10:30. Well, any entries around 10 a.m. time, there is a $625 loss occurred. Okay, six trades. Most of trades happen at 9 a.m. And then you look at these numbers. So you can either stop the strategy at 9:30 and then restart the strategy at 10:30 and then trade the rest of a day. That's another method you can do. Let's say 10:30. Okay. We just you can load. Right. That's the other. Okay, let's see. We can do 10:30. Right. A.m. That's the first. And the second is you want to do 12:30 p.m. to 3 p.m. Right? Then you run these two strategies, and you look at this one's from 12:30 to 3 p.m. and you look at 1400. Okay, and you have uh, this percentage 23 trades 1400, and then you look at the morning session, which is 8:30 a.m. to 10:30. Okay, and the same thing, you have the same drawdown, but you have 21 trades. So you have 2200 plus 14. You got like a 36 ish, 35, 37, right? That is another way you can apply the strategy to trade with, and the other way you can do is to just set the strategy time 8:35 to 3 p.m. That's the whole day, right? And then you go. Then you look at the overall percentages, this number, and from this date to this date. So, and you can actually do the strategy analysis based on different parameters you wanted to play with. But as of now, this is recommended settings for the strategy, and it will automatically enter the trades for you to trade this instrument for this time frame. Um, it's pretty simple. Okay, I'll probably add more settings later uh, to meet different needs, but again, I just want to keep it simple, as simple as possible, to not to overrun uh, the market and to overtrade the market, or to look at different indicators. If you have too many indicators on the chart, and then you'll definitely get your head really uh, struggled and messed up. So that's my opinion, and uh, I'll have the strategy upper for download, and you can use it and do different settings for yourself and see how it goes. If you have any questions, just email me, let me know, and I'll be around. For the last week, the forgot last week. What's last week? Yeah, here we go. Just want to just take a look at the report. Um, daily. This is last week. You have one loser, and then four winners. Not too bad. And this one, this week, and this week, and this week. This is a bad day. I got five losers. So the rest is okay. You can always change your settings and to be creative, but the core is based on MACD and linear regression. And you can also do manual trade if you want, and uh, based on the chart, you can do it. You can look at it, and then if it happens, and once the line is pointed, and then you can just start trading. I'll have this up and running for download, and please let me know if you have any questions. Thank you very much for watching this video, and also I just want to say, for compliance reasons, everything displayed and shown in this video is hypothetical trading, and you're gonna have to basically be very careful with your trading methods, and risk management is important. Okay, thank you.